Welcome to the fourth video in AUSTRAC's Customer Due Diligence Essentials series, also known as CDD Essentials. This series explores one of the key components of Australia's anti-money laundering and counter-terrorism financing, understanding who your customers are. In this video, we'll be discussing enhanced CDD. The information presented in this video is current at the time of recording, is general in nature, and doesn't constitute legal advice. You may consider obtaining your own independent professional advice, which can take into account your business's specific and individual needs. We recommend that you consider this video's content alongside the detailed guidance available on the AUSTRAC website. Throughout this recording, we'll pause for short reflection questions to test your understanding. Please have a way to record your responses as we go. There are 4 videos in the CDD Essentials series. Video 1 is a CDD overview where we provide a concise look at the CDD cycle, explore customer risk ratings, and define essential terminology. Video 2 explores initial CDD and simplified CDD, including when and how each applies. We also touch on delayed initial CDD, pre-commencement customers, and reliance on third parties. Video 3 examines ongoing CDD, explaining how to identify, assess, manage and mitigate a customer's money laundering, terrorism financing and proliferation financing risks over the course of the business relationship. Video 4, being this video, looks at enhanced CDD, including what it is, why it matters and when to apply it. Enhanced CDD involves taking additional steps to identify your customer and to identify, assess, manage and mitigate their high MLTF risk. So let's move on to learning outcomes. By the end of this video, you'll be able to explain why enhanced CDD is required and the role it plays in managing a customer's money laundering, terrorism financing, proliferation financing risk, or for short, customer MLTF risk. Identify all circumstances where enhanced CDD must be applied under the AML-CTF Act and rules. Describe the enhanced CDD measures that must or may be used to manage and mitigate MLTF risks. Develop appropriate enhanced CDD processes and ensure they are reflected in AML-CTF policies. Before we look more closely at enhanced CDD, let's take a moment to review the overall CDD process. Customer due diligence is a key part of your AML-CTF program. It involves understanding who your customers are, from before you start providing them with a designated service and throughout the course of your business relationship with them. To reiterate, it begins with initial CDD, where you must identify your customer and certain other parties and establish the customer's MLTF risk before providing them with a designated service. As you continue providing services, you must conduct ongoing CDD by monitoring for unusual activity or behaviours that may require submitting a suspicious matter report. Your customer's MLTF risk level will determine whether additional measures are required or not, such as you may apply simplified CDD for low-risk customers. For high-risk customers or specific situations, enhanced CDD must be applied. Together, these elements help your business to appropriately identify, assess, manage, and mitigate MLTF risk throughout the business relationship with your customer. Now that we've seen how the different elements of CDD fit together, let's take a closer look at enhanced CDD. Enhanced CDD plays an important role in detecting, disrupting and preventing money laundering, terrorism financing and proliferation financing. It involves taking extra steps to identify your customer and understand the MLTF risks they present. Enhanced CDD gives you a deeper understanding of who your customer is, how they use your designated services, and whether their activity raises concerns you need to address. Your enhanced CDD measures help protect your business, the financial system, and the wider community from criminal exploitation. There are specific circumstances where you must apply enhanced CDD. These include what is shown on the screen. When a customer's MLT of risk is high, when a suspicious matter report is required and you intend to continue providing the designated service to that customer, when a customer requests a designated service that involves an unusually large or complex transaction, or a transaction with no clear economic or lawful purpose, or an unusual pattern of transactions, when a customer requests a designated service as part of a nested services relationship, when the customer or their beneficial owner, a person receiving a service on the customer's behalf or a person acting on behalf of the customer, is a foreign politically exposed person, when the customer or their beneficial owner, a person receiving a service on the customer's behalf or a person acting on the behalf of the customer, is located in or formed in a high-risk jurisdiction. We'll explore these circumstances in more detail shortly. Enhanced CDD includes a range of measures that help you manage and mitigate your customer's MLT of risk. These might involve collecting and verifying additional information about the customer, asking about the reason for a transaction, obtaining details about the customer's source of funds or source of wealth, or reviewing transactions more closely. It's important that the measures you choose are targeted to the customer's specific MLT of risk. They must also be proportionate to that risk, effective in managing and mitigating it, and appropriate to the duration of the risk. Your AML-CTF policies are an important part of your AML-CTF program. These AML-CTF policies ensure you comply with your AML-CTF obligations by detailing the policies, procedures, systems and controls you'll use to manage and mitigate your MLTF risks. We expect your AML-CTF policies will clearly set out how your business will use a range of measures when you apply Enhanced CDD. AUSTRAC expects that your policies for Enhanced CDD will set out the following: when you'll apply different Enhanced CDD measures in response to specific MLTF risks, who in your business is responsible for applying Enhanced CDD, how you'll monitor and review the effectiveness of your Enhanced CDD measures, how you'll manage your tipping off obligations when conducting Enhanced CDD, and how you'll ensure those measures are targeted to your customer's MLTF risk, proportionate to the risk level, effective at managing and mitigating the risk, and appropriate to the risk duration. These documented processes help ensure your business can detect, respond appropriately, and demonstrate how you intend to comply with your obligations. Record keeping is another important part of Enhanced CDD. Records you might make include recording the circumstances that triggered Enhanced CDD, the measures you applied and why, and any additional information you collected or verified. You might also record whether an SMR was submitted, any changes made to the customer's MLTF risk, and any decisions to apply additional controls or limit services due to the level of risk. As mentioned in our previous webinars, these records help you show compliance, assist you in building a clearer understanding of your customer's MLTF risk, and help you adapt your Enhanced CDD measures over time to ensure they remain effective. Before we move on, let's pause and check your understanding of when Enhanced CDD is required. We'll look at a few short scenarios, and you'll need to decide which of the customers require Enhanced CDD. Select all that apply. Your options are A, a long-standing customer whose recent transactions are slightly higher than usual, but still consistent with their known business activity. B, a prospective customer who has a complex layered ownership structure involving entities in a high-risk jurisdiction. C, a customer who asks to carry out a very large, last-minute transaction with no clear economic purpose. The explanation they provide is vague and inconsistent. D, a customer who updates their mailing address during routine account maintenance and continues using your services normally. You might like to pause the video as you write down your responses. The correct answers are option B and option C. Option B requires enhanced CDD because the customer has a complex layered ownership structure involving entities in a high-risk jurisdiction. This is a situation where enhanced CDD must be applied to better understand who owns or controls the customer and assess the MLTF risk. Option C also requires enhanced CDD because the customer is requesting a very large last-minute transaction with no clear economic purpose and vague, inconsistent explanation. Unusual or unexplained transactions like this are a clear trigger for enhanced CDD. Option A doesn't require enhanced CDD as the activity is still consistent with the customer's known business activities. Option D doesn't require enhanced CDD as a routine update to contact details on its own doesn't indicate higher MLTF risk. Remember, enhanced CDD is applied when specific risk-based triggers are present. We'll now explore this in more detail and see when enhanced CDD must be applied. There are specific circumstances set out in the AML-CTF Act and Rules where you must apply enhanced CDD. These circumstances reflect situations where a customer presents a high MLTF risk or where the nature of their activity requires further checks to manage and mitigate that risk. The first circumstance where you must apply enhanced CDD is when a customer presents a high MLTF risk. A customer's risk level may be identified during initial CDD or may increase over time as part of ongoing CDD. For example, you may assess a customer's MLTF risk becomes high following customer monitoring alerts, when there are changes in their Know Your Customer or KYC information, when there are other factors such as change in the kinds of designated services they're requesting or the way they're using their services. We expect your AML-CTF policies to enable you to detect if the customer's MLTF risk becomes high and set out what you'll do in response. Let's look at a practical example of this. An accounting practice is onboarding a new client and collects their KYC information. During this process, the practice identifies a complex ownership and control structure involving several layers of companies and trusts. The purpose of the structure is not clear from the information the client has provided, and the arrangement appears more complex than is required for the services requested. This suggests the client may be a high MLTF risk. The practice applies enhanced CDD as part of its initial CDD to understand the nature of the structure, reassess the client's MLTF risk, and applies the controls needed to manage and mitigate that risk. A customer's MLTF risk can also change during the business relationship. Ongoing CDD helps you detect this. A change in risk may arise due to updated KYC information, new monitoring alerts, changes in behaviour, or when the customer requests new designated services. When you identify that a customer's MLTF risk has increased to high, you must apply enhanced CDD to reassess their circumstances and determine whether additional controls are required. Again, let's look at a practical example. A remittance business is monitoring an existing customer who previously sent small routine payments to family members overseas. Over time, the customer begins sending larger transfers to new overseas destinations, including a jurisdiction that has been identified internationally as high risk. This change in behaviour suggests the customer may now present a high MLTF risk. The business applies enhanced CDD to better understand the purpose of the transfers, confirm the customer's circumstances, and apply the controls needed to manage and mitigate the risk. These examples show how a customer's MLTF risk can be identified at different stages of the customer relationship, and why enhanced CDD is essential for understanding, managing, and mitigating that risk. Another circumstance where you must apply enhanced CDD is when you are required to submit a suspicious matter report and you intend to continue providing the designated service to the customer. A suspicious matter report, or SMR, must be submitted when you form a suspicion on reasonable grounds that the information you have may be relevant to crime, a customer, future customer, or their agent are not who they claim to be, or a person is planning an MLTF offence using a designated service. This also includes if you have information where you suspect on reasonable grounds that it concerns money laundering, terrorism financing, offences such as tax evasion, or Commonwealth, state or territory offences. When this happens, enhanced CDD helps you reassess the customer's MLTF risk and decide whether it's appropriate to continue the relationship. When applying enhanced CDD after forming a suspicion, you must be careful to avoid tipping off the customer. Tipping off occurs when information is disclosed that would or could reasonably be expected to prejudice an investigation. Tipping off is a criminal offence, and you don't need to know whether an investigation is underway for the offence to apply. You must not delay submitting your SMR to complete enhanced CDD if you have already formed a suspicion on reasonable grounds. To learn more about tipping off, you can refer to guidance found on our website. Another circumstance where you must apply enhanced CDD is when a customer requests a designated service that involves unusual, large or complex transactions or patterns of transactions, or where the designated services have no apparent economic or legal purpose. Unusual transactions may involve activity that falls outside the customer's typical profile and behaviour. Large transactions may be significant in value compared to the customer's profile or past activity. Complex transactions might involve multiple steps, unclear structures, or payment arrangements that make the purpose hard to understand. In each case, enhanced CDD helps you determine whether the activity is consistent with the customer's circumstances and whether additional controls are needed. Let's review an example. A real estate agency is assisting a customer to purchase a commercial property. During the process, the customer asks to restructure the transaction so the deposit is paid by an unrelated third party using multiple instalments from different accounts. This arrangement is complex and doesn't align with what the agency knows about the customer's stated business activities. As part of enhanced CDD, the agency identifies and verifies the third party involved, confirms the purpose of the payment arrangement, and assesses whether the transaction restructure represents a higher MLTF risk. The agency uses this information to decide whether additional controls are needed before continuing with the transaction. This example shows how unusual, large, or complex transactions can signal potential MLTF risks and why enhanced CDD is an important tool for understanding and managing that risk. Another circumstance where you must apply enhanced CDD is when the customer, a beneficial owner, or a person who is receiving a service or acting on behalf of the customer is a foreign politically exposed person, also called a foreign PEP. A foreign PEP is an individual who holds a prominent position or public function in or for the legislature, executive, or judiciary of a foreign country. This includes people with significant public authority, such as senior government officials, judges, military leaders, and heads of state-owned entities. Foreign PEPs may present a high MLTF risk because their position and influence can create opportunities for corruption or the misuse of public funds. This risk extends to any beneficial owners, family members, or anyone acting on the PEP's behalf. You may identify a foreign PEP during initial CDD or as part of your ongoing CDD processes. This can happen when reviewing identification documents, updating KYC information, or identifying individuals involved in more complex ownership or control structures. For example, a trust beneficiary or a company director could be a foreign PEP, even when the customer themselves is not, and you may discover new beneficiaries or directors of your customer when conducting ongoing CDD. When you identify that a customer is a beneficial owner, a person who is receiving a service on behalf of the customer, or a person acting on behalf of the customer are a foreign PEP, you must apply enhanced CDD. These requirements help you understand the nature of the relationship, the level of risk involved, and whether further controls are required. We will explore the range of enhanced CDD measures in more detail later in the webinar. This includes when a person has previously been a PEP. They may present a high MLTF risk after ceasing to be a PEP due to the continuing political influence. Another circumstance where you must apply enhanced CDD is when the customer, a beneficial owner, or a person who is receiving a service or acting on behalf of the customer is an individual physically located in or a body corporate or legal arrangement formed in a high-risk jurisdiction. These are jurisdictions that the Financial Action Task Force, also known as FATF, has identified as requiring enhanced due diligence because they have AML-CTF weaknesses. High-risk jurisdictions can be associated with corruption, organised crime, tax secrecy, or limited regulatory oversight, all of which increase the likelihood of MLTF activity. You may identify a high-risk jurisdiction link during initial CDD when reviewing corporate information or as part of ongoing CDD when a customer updates their address, changes business locations, or begins transacting in or through those countries. For example, a company incorporated in a high-risk jurisdiction that applies for a designated service would trigger the need for enhanced CDD. Enhanced customer due diligence is also required when a designated service forms part of a nested services relationship. A nested services relationship occurs where you are a remitter, virtual asset service provider, or financial institution, and you provide designated services to a customer that is also a remitter, virtual asset service provider, or financial institution. Specifically, enhanced CDD applies when you are providing designated services through a permanent establishment in one country and your customer uses that service to provide services to others at or through a permanent establishment in another country. This is different to correspondent banking relationships, and you can learn more about this on the AUSTRAC website. Nested relationships can obscure the true customer, the flow of funds, or the nature of the activity. They are common in sectors where one business relies on another to access financial systems, payment platforms, or international transaction channels. The structure can increase MLTF risk because the reporting entity delivering the service may not have full visibility over the downstream customer or how the service is being used. Where a nested services relationship exists, enhanced CDD must be applied to understand the parties involved and the level of MLTF risk they pose to your business. The specific enhanced CDD measures available will be explored later in the webinar. Okay, so before we move on, let's pause and check your understanding of when enhanced CDD should be applied. Consider what we've just covered. When should you apply enhanced CDD? Again, you might like to pause the video as you write down a few examples. Enhanced CDD should be applied in specific risks-based circumstances set out in the AML-CTF Act and rules. This includes situations where the customer's MLTF risk is high, either at onboarding or during the business relationship. The customer requests designated services that are inconsistent with their known or stated legal purpose or involve an unusual pattern of transactions. You're required to submit a suspicious matter report and you propose to continue providing a designated service to the customer. The customer requests an unusual, large or complex transaction. The designated service is part of a nested services relationship, or where the customer or associated party is a foreign politically exposed person or linked to a high-risk jurisdiction. These circumstances reflect high MLTF risk and are situations where enhanced CDD must be applied to help you better understand, manage, and mitigate that risk. Now that we've looked at when enhanced CDD must be applied, we can turn to the measures you can use. Let's start with exploring how to craft your enhanced CDD measures so that they are appropriate to the MLTF risk. Enhanced CDD measures support informed decision making. They help you determine whether you can continue to provide a designated service, whether additional controls are needed, or whether you should limit or decline services. The measures you choose are expected to be designed to mitigate and manage the risk. All enhanced CDD measures need to be targeted, proportionate, effective, and appropriate to the duration of the risk. A measure is targeted when it addresses the customer's specific MLTF risks. For example, if the high risk presented relates to the customer's ownership structure, the steps you take should focus on clarifying who is involved and how they control or benefit from the customer. A proportionate measure is one that matches the level of MLTF risk you've identified. Not all risks are the same. Some may be managed with simple steps, while higher risks will require more detailed and intensive action. To be effective, a measure will help you understand the customer circumstance and enable you to manage and mitigate the risk. Enhanced CDD is not a checklist. It requires tailoring your steps to genuinely help you confirm, clarify, or reassess what you know about the customer and their activity. Measures also need to be appropriate to the duration of the risk, which means applying them for as long as the risk remains and adjusting them as the customer's ongoing activity or behaviour changes. Selecting enhanced CDD measures requires careful judgment. Start by thinking about why enhanced CDD was triggered and what you need to understand about the customer's circumstances in order to mitigate and manage their risk. In some situations, one measure may be enough, while in others you may need to take several steps to clarify information or resolve inconsistencies. Your enhanced CDD processes should help you decide whether the customer still fits within your business's risk appetite. In high-risk situations, your AML-CTF policies may require you to escalate to a senior manager to determine next steps. Enhanced CDD can involve a range of actions depending on the situation. Before applying these measures, consider what triggered it and what's needed to address the risk. This could involve start with the trigger. Why was enhanced CDD triggered and what do you need to clarify? Identify gaps, inconsistencies, or changes that need confirmation. Apply what's needed. Use one or several measures depending on the situation. Choose the steps that will meaningfully improve your understanding of the customer's circumstances. Support decision making. Use your findings to determine whether the customer remains within your risk appetite. Escalate when needed and decide whether to limit or decline services if the business relationship should end. Choose risk-based steps. Select measures relevant to the MLTF risks identified. Examples include additional KYC, verifying or re-verifying information, reviewing unusual or recent transactions, performing source of funds and source of wealth checks, requesting documents, or closer monitoring. These are examples only and aren't intended to be prescriptive. The measures you choose will depend on your services, the customer, and the specific MLTF risk they pose. We'll now look more closely at a few types of enhanced CDD measures and what they involve in practice. We'll start with situations where you need more information about the customer before you can make an informed decision. An appropriate enhanced CDD measure you might apply is verifying or re-verifying KYC information. This involves checking the information you hold against additional, reliable and independent sources. You might take this step when information is outdated, inconsistent, or linked to a trigger that raises doubts about its accuracy. Re-verification helps ensure your understanding of the customer remains current and reliable. This step can help you confirm the accuracy of identification information, employment details, addresses, or other key facts that may affect your understanding of the customer's MLTF risk. So let's look at an example. A licensed club has a long-standing member whose identification details no longer match with records already on file. The customer has also suddenly increased the number of times they use the electronic gambling machines at the venue. This is unusual because they have previously been diligent with updating the club about any changes in their circumstances and regular in their visits to the club. As part of enhanced CDD, the club re-verifies the member's identification and membership details to confirm their current circumstances. The club considers the risks and continues providing the services, but also submits a suspicious matter report and increases its monitoring of the member's activity, taking care to avoid tipping off the customer. Remember, when enhanced CDD is applied, it's not a single step or a one-size-fits-all process. You need to look at the circumstances, identify what risk needs to be addressed, and apply the measures that will genuinely help you understand, manage, and mitigate those risks. Another enhanced CDD measure you might use is collecting additional KYC information. This involves gathering more detail about your customer, their structure, or the nature of their activities. It helps you clarify gaps, resolve inconsistencies, and build a clearer picture of the customer's MLTF risk. This step may be appropriate when initial information is incomplete or when the reason for enhanced CDD relates to uncertainty about who the customer is or how they operate. Additional KYC information might include further details about beneficial owners, clarification of a complex ownership structure, or extra information about the purpose of the relationship. You may also need information about the customer's reputation, additional identification documents, or information about linked parties, such as agents or representatives. For example, a financial advisor is onboarding a new client who wants help managing a portfolio of high-value investments. The initial KYC information suggests the client is investing on their own behalf. But during discussions, the advisor learns some assets will be held through a family trust and a related company that were not disclosed during onboarding. Because trusts are commonly exploited by money launderers, the financial advisor knows that they need to understand the nature of the trust holding the assets. It also means that the advisor does not have a clear idea of who is involved yet. To clarify the customer's structure and purpose of holding assets through a third party, the advisor collects additional KYC information about the trust and the related company, including details of beneficial owners. This helps the advisor confirm who is involved in the arrangement and assess the customer's MLTF risk more accurately. More detailed monitoring involves taking a closer look at a customer's transactions or behaviour for a period of time. You might use this approach when a customer's activity changes or when the reason for enhanced CDD relates to unusual or unexpected patterns. Detailed monitoring helps you determine whether the activity aligns with what you know about the customer. This can help you identify behaviour that might indicate MLTF risk, detect transactions with no clear economic or lawful purpose, or understand whether recent activity is consistent with the customer's stated purpose. Some methods you could use for increased monitoring and analysis include reviewing your customers' past transactions more closely to help better identify and assess their MLTF risk and understand how they use your designated services, reviewing the customer's transactions more frequently, manually reviewing unusual, complex or high-value transactions, updating monitoring triggers to flag additional kinds of transactions. Again, let's explore an example. A conveyancing business is assisting a client who begins purchasing several residential properties in a short time frame. This is unusual compared with their past behaviour, where they typically bought and sold a single property every few years. The conveyancer starts to look more closely at the client's settlement instructions and subsequent transactions to understand whether this rapid activity is consistent with the customer's circumstances or if further action is required. If questions remain about how the customer is funding their activities, the next enhanced CDD measure may be appropriate. In certain circumstances, the AML-CTF Act and rules require you to check the customer's source of wealth and source of funds when enhanced CDD is required. Doing these checks helps you understand whether the customer's financial position is credible and whether the funds for their activity come from a legitimate source or not. Source of funds refers to how and where the customer obtained the funds used in a particular transaction. It helps you understand where the money came from, whether the explanation is reasonable, and whether the activity aligns with the customer's known circumstances. For example, a law practice is assisting a client with a property settlement. During the matter, the client asks the firm to handle a significant payment that is far larger than the amounts discussed earlier in the engagement. The client explains that the funds come from a recent asset sale, but provides limited detail. Because the size and timing of the payment are unusual, the practice asks the client for further information to establish the source of funds so they can understand how the money was obtained and confirm that the transaction aligns with the client's circumstances. This may include information relating to the sale of the asset, such as the nature of the asset sold, and evidence showing that the proceeds of the sale are the source of funds being used in the payment. So, moving on, source of wealth refers to how the customer accumulated their total wealth. It provides a broader understanding of the customer's financial position and helps you assess whether their activity is consistent with their overall profile. You might use this measure when a customer's stated financial position does not match their behaviour, or when you need to understand the origin of their wealth over time. For example, a currency exchange business has a regular customer who they know from previously provided information that their occupation means they earn a median salary in Australia. They usually exchange small amounts for travelling to visit family. During a later visit, the customer requests to exchange over $300,000. The customer gives a general explanation, but it's not clear how they accumulated the funds for such a large transaction. Because their overall financial position is unclear, the business asks for information about the customer's source of wealth to understand whether the amount being transacted is consistent with their stated financial profile. This may include information about how the customer accumulated their wealth over time, such as through business ownership, inheritance, property sales, or long-term investments. So now that we've explored several enhanced CDD measures that you can choose to use depending on the customer and the nature of the risk, let's pause for a quick activity. In this scenario, a long-standing customer begins transacting on a large scale. The size of their transactions doesn't fit your understanding of the business or finances. Which measure is most appropriate? Your options are A. Seek information about the customer's source of wealth to assess whether their ongoing use of designated services is consistent with what you know about the customer and their expected activity. Or B. Request a second form of identification. Again, pause if you need additional time and record your answer. The correct answer is option A. In this scenario, the trigger relates to unexplained financial activity. Seeking information about the customer's source of wealth is the most targeted and proportionate measure, as it helps you assess whether the customer's ongoing use of designated services is consistent with what you know about their circumstances. Option B is not the most appropriate response on its own. Requesting additional identification does not address the underlying concern, which is how the customer is funding the activity. Let's look at another scenario. A new customer is a company with multiple layers of ownership, including a trust that was not mentioned earlier. Which measure is most appropriate? Your options are A. Collect additional KYC information about the ownership and control structure, or B. Monitor transactions for 3 months before taking further action. Pause if you need the time and record your answer. The correct answer is A. In this scenario, the uncertainty is about who the customer is and who ultimately owns or controls them. Collecting additional KYC information about the ownership and control structure is the most targeted and appropriate response. Option B is not appropriate at this stage. Monitoring transactions does not resolve gaps in customer identification or ownership information, which need to be addressed before you can properly assess and manage the customer's MLTF risk. The example reinforces that enhanced CDD measures should always be linked to the trigger and focused on resolving the specific risk or uncertainty you've identified. So moving on to our final question. In this scenario, you form a suspicion and submit a suspicious matter report, but intend to continue providing the designated service. Which measure is most appropriate? Your options are A. Re-verify the customer's identification documents to confirm they remain valid without further consideration of the circumstances that led to the suspicion, or B. Apply multiple enhanced CDD measures targeted to the concern, such as clarifying activity patterns and reviewing recent transactions. Again, pause to record your answer if required. The correct answer is option B. In this scenario, forming a suspicion means you must reassess the customer's MLTF risk. Applying multiple enhanced CDD measures targeted to the concern, such as clarifying activity patterns and reviewing recent transactions, is the most appropriate response. Option A is not sufficient on its own. Simply re-verifying identification documents does not address the circumstances that led to the suspicion. This example reinforces that when an SMR is required and services continue, enhanced CDD must focus on understanding and managing the specific risk. Now that you've applied these principles, let's look more closely at the specific enhanced CDD measures that must be applied in certain situations. Enhanced CDD is required when understanding a customer's financial position is essential to assessing and managing their MLTF risk. You must apply enhanced CDD in the following circumstances. The first is when a customer presents a high MLTF risk and information about their source of funds and source of wealth is relevant to understanding that risk. In these cases, you must establish on reasonable grounds information about how the customer acquired the funds used in a transaction and how they accumulated their overall wealth. This helps you assess whether the customer's activity is consistent with their financial profile and whether the risk can be managed and mitigated. The second circumstance is when you establish on reasonable grounds that the customer or other relevant party is a foreign PEP or a high-risk domestic or international organisation PEP. When you identify any of these PEPs, you must establish on reasonable grounds information about their source of funds and source of wealth to understand whether their financial position is credible and whether the risk can be managed. The third circumstance applies to certain virtual asset services. If you're a virtual asset service provider or VASP, you must apply enhanced CDD to a customer who deposits or receives physical currency in exchange for virtual assets, including through a crypto ATM. In the course of the business relationship, if you have a reason to review, update, or re-verify the KYC information for these customers, you must also seek information about their source of wealth. These steps help you understand the customer's financial position and assess whether the transaction or service presents an unacceptable MLTF risk. These requirements reflect the higher MLTF risk associated with certain customers and services. Understanding where a customer's funds and wealth come from supports your ability to identify unusual activity and make informed decisions about whether your business can continue providing the designated service in line with your risk appetite. Once you've completed your enhanced CDD checks, you need to use what you've learned to decide what happens next in the customer relationship. When thinking about your response, consider the following. First, assess your findings to decide whether the customer's MLTF risk can be managed with your existing controls or whether further action is needed. Keep in mind that enhanced CDD may take more than one step. One check might reveal gaps or concerns that mean you need to do another check. Use what you learn to build a clearer picture of the customer's risk. Next, take action. If the risk can be managed, you may continue with your current controls. If not, we expect your AML-CTF policies to set out how you respond. For example, strengthen controls, carry out additional checks, or reassess whether the customer remains within your risk appetite. Remember, if the risk is unacceptable, you may limit services, decline the request, or end the business relationship, guided by your MLTF risk appetite. Finally, update the customer's MLTF risk rating to reflect new information and support consistent treatment of risk across your business. The way you decide how you'll carry out what we've just covered varies for each business. Your AML-CTF program is not just for showing how you comply with your obligations, but most importantly, it plays a crucial role in detecting, disrupting, and preventing MLTF. This in turn helps protect our community and financial system from serious and organised crime. This is why you should be outlining in your AML-CTF policies how you do this for your business and the situations you face when you provide designated services. Outlining the processes and steps you'll take is an important way of showing how your business applies consistent, reasonable, and repeatable practices across any of your enhanced CDD situations. AUSTRAC expects that these policies set out how you respond to any enhanced CDD findings. This includes all of the following: processes to manage and mitigate the MLTF risks you identify, processes to escalate issues for further consideration by your business, what you'll do if enhanced measures can't manage and mitigate the customer's MLTF risks, processes for submitting an SMR to us when required. You may need to submit an SMR before you finish applying enhanced CDD measures. Consider if you'll continue providing designated services to a customer or end the business relationship to manage and mitigate any MLTF risks. A quick reminder about record keeping. As we discussed earlier in the webinar, you must document the enhanced CDD measures you applied, the information you collected, and any decisions you made as a result. These records help demonstrate compliance and ensure your staff understand how similar risks should be managed in the future. Let's quickly recap the key concepts we've covered. Enhanced CDD builds on the foundations of initial and ongoing CDD and helps you identify, assess, manage and mitigate a customer's MLTF risks. Enhanced CDD is required when a customer presents a high MLTF risk or when specific triggers in the AML-CTF Act and rules apply, such as SMR obligations, unusual or complex transactions, foreign PEPs, high-risk jurisdictions, or nested services. The enhanced CDD measures you apply should be informed by the MLTF risk and designed to manage and mitigate the risk. These measures need to be targeted, proportionate, effective, and appropriate to the duration of the risk. Measures you may use include collecting additional KYC information, verifying or re-verifying details, reviewing transactions more closely, and requesting information about a customer's source of funds or source of wealth. Responding to enhanced CDD findings may involve strengthening controls, updating the customer's MLTF risk rating, or deciding whether the designated service or business relationship can continue. Strong record keeping supports each stage of this process and helps demonstrate compliance. We'll now look at your next steps and where you can find more information to support your ongoing compliance. You can find detailed guidance on the AUSTRAC website to help you understand and apply customer due diligence across your business. This includes information on initial and simplified CDD, ongoing CDD and enhanced CDD, and information on related obligations such as reporting, personnel training, and developing an AML-CTF program. Understanding this guidance is an important step in applying the AML-CTF Act and rules in practice to ensure that your CDD processes are effective and consistent. Your next step is to review and update or begin drafting your CDD policies and procedures. This includes how you identify your customers, how you monitor their activity over time, and how you decide when enhanced CDD is required. Some of you may already have systems and controls in place, while others, namely soon-to-be regulated entities, may be building these processes for the first time. In both cases, mapping your existing or planned processes against the reformed CDD requirements will help you identify what needs to be strengthened or added. As you prepare your AML-CTF program, make sure it clearly explains how you carry out initial, simplified, ongoing, and enhanced CDD. This includes the steps staff must take, the measures available to them, and how decisions are made when a customer presents a higher MLTF risk. Clear policies now will support consistent practice when the reforms begin. And a reminder, if you outsource any part of your AML-CTF program creation or AML-CTF functions, you remain responsible for ensuring those arrangements meet your AML-CTF obligations. If you haven't already viewed the overview video or earlier recordings of this series, we recommend doing so. These resources provide important background on customer risk ratings and the broader CDD cycle, which supports effective enhanced CDD. You can also subscribe to reform updates on the AUSTRAC website to be notified as new guidance, tools, and resources become available. This now brings the video to an end. As we mentioned at the start of this recording, we recommend that you consider this video's content alongside the detailed guidance available on the AUSTRAC website. The AUSTRAC YouTube channel has other videos available, including the other 3 videos in this CDD Essentials series. If you are a new reporting entity, and if you haven't already, we recommend also watching the AML CTF Essentials series. This is a series of 4 webinars designed to introduce you to AUSTRAC, Australia's AML CTF regime, and provide the information you need to help you meet your new obligations. For further education products, please visit the AUSTRAC website. Thank you for viewing this enhanced customer due diligence video.